The Government Institutions Pension Fund, GIPF, has launched its latest integrated annual report. Now, tonight, I'm joined in studio by GIPF Chief Executive Officer, Mr. Martin Inkumbi, to discuss the report and other affairs of the fund. A very good evening to you, sir, and thank you very much for joining us on Business Today.
Good evening, and thank you for inviting me.
Now, Martin, take us through the description of the current market conditions that the GIPF is operating in and how those have shaped the mandate of the fund.
Well, the market conditions under which GIPF operated for the period under report for that integrated annual report is the year 2023 ending 2024. Obviously, we have gone through the year 2024, 2025, March 2025 that have ended, and now we are looking forward. Now, if you're talking about the financial markets in which the fund invests during that period, I will say relatively more stable, more predictable than the markets that we are looking at now and going forward. Despite that, the fund has done fairly well during that period, specifically Namibian listed investment, equity investment has done well. Namibian bond investments have also done very well. We have seen good return, especially from our US equity. So it has been a good period. Now, that is the financial period that ended up to March 2024, for which we launched the annual report. Now, we're looking forward. Developments are happening. We see tariffs being raised by this country, and that obviously that will have an impact on enterprises and their performance going forward.
Right.
But we will be observing that, and that's the nature of investments, constantly looking at that and identifying opportunities and moving out of risk areas.
Do you envision a significant impact on the next period that the fund is getting into, considering the geopolitical landscape? And not really to get into that too much, but there is, like you mentioned, there is a lot going on in the world right now.
Oh, certainly. The current development will have an impact on the performance of enterprises. Tariffs increases the prices of goods, including inputs in the production process, and that will impact the profitability of businesses. There is geopolitics that is impacting trade routes and the cost of doing business or trading, and that has got an impact on businesses and therefore their return. And us as investors in those businesses will also feel that impact.
Indeed. Now, the GIPF has released its integrated annual report for the period which was 2023-2024. What exactly is the picture looking like? What does that look like from the fund's perspective?
Well, I can say the picture is positive, quite positive. We have reported that the total assets under management has grown to 167 billion. We have seen an 18 billion net investment return. That represents a return of about 13.2% on our investments. And that's well above the return hurdle that we have set for ourselves, which is inflation plus 5. So if you look at inflation for the period, about 5%, add 5, that's 10. And the fund has achieved on average 13.2. That's basically about 3% above the target, so that is very good. And that has culminated in the solvency position of the fund being very good at 119%, meaning that the assets of the fund are exceeding the present value of liabilities by about 19%. And that's above even the level that the fund has set of 105 to 115. So in simple terms, that basically means the fund is currently in a good position to meet its future obligations.
Right.
It's very important when we talk about assets of the fund. Often people are only focus on the assets, the balance sheet, and they are looking at the figure of 167 billion. Of course, it's a very good and healthy figure, but it's very important that we don't forget these liabilities behind that, which is the benefits the fund has promised members, current members that are still in employment and members that are already in retirement. So those funds are dedicated for that purpose. And our objective is to manage the fund and to earn the returns such that we are able to meet those future obligations.
Martin, there definitely are some challenges and risks that the fund is experiencing and facing. Talk to us a bit about what that looks like and how you plan on addressing them.
Oh, certainly. When you are playing in the investment space, there are always risks. Specifically for a pension fund, I'm talking about the liabilities or obligations that we need to meet in future. And I would say probably the biggest risk to a pension fund, especially to a defined benefit pension funds like GIPF, is to make sure that in the short to medium term, or rather maybe medium to long term, the fund is able to meet its obligations. So you need then to manage the assets such that the funding level or the solvency level remains above 100%, meaning that your assets must always exceed your liabilities. So that is probably the biggest long-term risks that one faces. But in the short term, there are various risks which we need to manage. Beside investment returns, there is issues that are impacting the operating costs of the fund. Of course, we operate in a very big countries. Our members are everywhere. We need to reach out to them, and that has an impact on the OPEX of the fund, which we also need to contain. So those are some of the risks that we need to manage. Of course, there is technology nowadays also bringing in its own risks, which we need to manage. It has got benefits. It enables us to deliver service efficiently, maybe even reduce costs, but it can introduce its own risks as well. So there is a number of risks that we manage, probably as any other business, but I just flagged the high-level one and the most important one.
Sustainability is a big component to meeting your stakeholder obligations. Now, talk to us a bit on how it plays, how sustainability specifically plays a crucial role within the area within which the GIPF operates, and how sustainability is going, or how sustainability is going forward in terms of GIPF.
Yeah, I think the key indicator for sustainability for a pension fund is the funding level that I keep on referring to. It's that ability to be able to pay future benefits, and that is something that we keep our eyes on. There are other variables that will impact the sustainability of the fund. There are compliance issues that we need to adhere to. There are environmental and social governance issues that we need to have a look at. Obviously, there is general enterprise risk management of the business and the fund that we need to look at. So, but we are comfortable that the risk profile of the fund is healthy.
Now, it's just on the topic of sustainability, it also does increase investor confidence. And also then on the flip side of that, looking at some of your members knowing that in future, GIPF will still be able to meet its obligations.
Of course, yes, very important, especially for the members. I think it will give the members peace of mind when they have the understanding that their pension fund is able to pay their benefits going forward. They would like to have comfort that the assets are being managed prudently. And that requires really good governance, putting the right decision-making structures in place such that investment decisions in particular are made objectively and in a transparent manner. It requires robust risk management policies. It requires a selection of fund managers and investment managers that have the capacity and the experience to manage the investment prudently and achieve the returns that the fund is expecting.
Martin, let's specifically talk about some of your investment strategies that you have employed so far that are crucial for sustainable pension fund management.
Yeah, I think the starting point is always to appreciate and understand your liabilities, and then manage your investment such that your returns are able to meet your growing liabilities. We follow an asset liability management model, so understanding your liabilities and then managing your assets such that you are able to meet your future liabilities. So it starts then with that identifying a strategic asset allocation, which assets are you going to be investing in, and which asset classes are you looking at, and then following by identifying, because the pension fund itself does not make investments directly, but following a very robust process and transparent process of selecting suitable asset and investment managers that will manage those investments. And diversification is important, both across asset classes, but also across markets. Of course, the investment is also guided by regulations. There is expectations that the fund must invest part of its assets in the local market, but we're also looking at the international market. So at the moment, we're very close to 50-50. About 48% of the fund's assets is invested in Namibia, and about 52% is outside Namibia. Namibia and South Africa will take up about 65% of the GIPF investment at the moment. But we think the regulations is fair. I think it's allowing an opportunity for the fund to invest outside and benefit from international asset performance, but it also gives the opportunity for the fund to invest locally and help with the development of the local economy.
As per the report, Martin, the GIPF asset value has seen an increase from 151 billion into 2023 to 167 billion in 2024, which you had alluded to earlier. What specifically contributed to this uptick or to this growth?
Well, specifically, it's the performance or the return on investments. I have earlier indicated that we have seen good return from our Namibian investments, both equity and bonds. We also have seen good returns from the U.S. equity, especially the tech sector has done very well during that period. So those are some of the asset classes that has really contributed to those good returns, resulting ultimately in a net investment income of 18 billion. And that's the difference between the balance the prior year and the March 2024 balance sheet.
Martin, let's pivot just a tad bit. Now, active pension benefit payments have declined from 6.9 billion in 2023 to $6.3 billion in 2024. What would you say resulted, or what would you say attributed to this decline?
Yeah, that is attributed to a particular and maybe unique occurrence during that period. The decline in the payout during the 2024 period was due to some Ministry of Finance officials at the time who then were transferred to NAMRA, and they actually had then the opportunity to call out their pension benefits. So that contributed to that significant payout. But otherwise, the payout have been following a slight but stable growth over the years. Right. And that is the trend that we are expecting, of course, unless another development happens. Of course, if there is an exit of members, you are going to pay out quite a significant amount in benefit payments.
Can you give us the performance of payment benefits for pension benefits to the fund's pensioners and other annuants?
Yeah, those statistics, unfortunately, to give you the exact figures, I may not be able to have them here at the moment, but the largest benefit is usually annuitants pension annuity. The other benefits will be death benefits, which will be paid to beneficiaries, and also withdrawal benefit when members are leaving the pension fund to go to other pension funds.
Now, Martin, how is the status of contributions to the fund as per the report? What is the report saying?
The contributions from members to the fund has been healthy and steady. The fund is receiving about 6%, no, 7% from the employees and the members, and 16% is coming from the employer. So it's about a 23% contribution to the fund on a monthly basis from the members, and that is contributing to the asset base that is invested. So that has been following that trajectory for over a period. I do know that in the report we're talking about the funding gap, that there is more payments in benefits to members than contributions that are coming in, which is true in the sense that as you have got a bigger portion of the 150 membership going into retirement, it's about 150 members, 100,000 which we call active, still in employment, and about 50% that are in retirement already, or 50,000. And as that number is increasing, you have more benefit paid out to members that are in retirement than the contribution that is coming in. But so far, the fund has been able to cover that shortfall easily with investment returns. So I talked about, for example, the gap in the period 2024 has been about 1.5 billion. But at the same time, you have got an 18 billion net investment income. So adequately able to cover that shortfall. But that said, it's not really a crisis when you have that deficit, because the members that are in retirement are entitled to those benefits. So in case payments need to be met, of course you need to liquidate the asset. It could only mean that the asset base of the fund could be shrinking in case the pension fund is winding up. But that's not something we envisage. Of course, the public servants or the public sector will be there. There may be movement from time to time, cycle to cycle, where more employees are coming through the public service. Maybe there is a reduction, and that will impact that gap from cycle to cycle. But it's not something that is a crisis to the fund.
You had alluded earlier on in our discussion that the fund has taken a 50-50 approach in terms of your investments, more like a 52% to a 48%, 52% being international-based investments, and then the other for Namibia. How would you describe the fund's diverse investment portfolio, and obviously considering the array of investments and the portfolio at the moment, and of course going into the future?
Yeah. In terms of markets, yes, I did indicate that about 48% in the Namibian market, both equity and bonds, and 52% internationally. And I said, if we look at Namibia and South Africa, about 65 is in the two countries' economies. In terms of asset classes, about 70% of that 167 billion is in listed instruments, either fixed income, bonds, or equity. The balance will be between various schemes and also unlisted investments. The local unlisted investment, or the unlisted investment, is really relatively an insignificant percentage of about 5%, because obviously it's also the riskier asset class. It can yield good return when there has been a selection of very good performing assets and that are well managed, but it could also be the other way around. So on your listed investment, that's where you have a more stable and predictable returns. And that's also where the fund has placed the biggest portion of its investments.
What value is your local investment adding to the Namibian economy? Take us into some major projects or significant projects that the fund is party to.
I would believe GIPF is making a very significant impact on the Namibian economy. During that particular period that ended March 2024, GIPF had committed 9 billion to Namibian unlisted investments, of which at the time about 6 billion has already been drawn down or invested. So there is a number of major projects that GIPF has assisted in bringing about. I would like to believe one of the very socially impactful investment is the Osona housing development. Several families are housed there. Basically, it was farmland. Capital was made available for the fund to service the land and build houses, and families have been able to acquire houses there at affordable prices. And obviously that development is ongoing. There's still room for further development of houses. That's just one. The public would have read about the Mashari Blueberry project in Kavango East. I think we have unlocked a new sector in agriculture.
Indeed.
And there is a number of renewable energy, both solar and wind, and various land servicing and housing projects across various cities and towns in Namibia. So that 9 billion, of which 6 billion has already been drawn, is making a significant impact.
Right.
And of course, that the amount is guided by the size of the fund, because it's a percentage, and of course, as the size of the fund grows, we will basically be required to make further commitment to the local economy.
Martin, what are some of the global and domestic environmental threats that have exposed the GIPF to some risks, and what strategies have you put in place to shield or to mitigate some of these challenges if they arise?
Yeah, I would rather say it's the humankind or human beings that are having adverse impact. Our activities have got a negative impact on the environment and the resources that we are utilizing. And I think we have realized that. And especially economic activities have negative impact on the environment at times. And I think the world have realized that, and especially the financing or investing community as well. Hence, now the move towards ESG policies and procedures and guidelines and standards, where it is expected that in doing business, in bringing about projects, we must be conscious and cognizant of the impact of our activities on the natural environment. Therefore, many financing institutions, including pension funds, certainly the GIPF, we have policies and guidelines that we expect fund managers who are managing the pension funds money and also the investee company who are the recipient of that money to be considerate of the environment and follow certain protocols to just minimize the impact of our economic activity on the environment. So, of course, the risk is coming back when the environment, I can put it, is fighting back. When the environment is fighting back, that will also have an impact on the livelihood of people and on our business activities and the returns on the investments that we are making. So it's imperative that we have guidelines that calls for responsible use of natural resources.
Martin, we are completely out of time, but I really did want to put this to you. Could you perhaps just briefly talk to us about your long-term strategic plan that is aimed at improving your business plan and operations and just moving forward?
Yeah. The number one thing is obviously we would like to remain in a position where we can give assurance to the members that we have the assets to meet your future benefits. And that requires prudent investments, and that is one. Secondly, we would like to improve our business by using, for example, technology, leveraging on technology to deliver service to our members, more cost effective, more comfortable from their perspective, and just move forward in that direction.
Indeed. Yeah. Well, that was a very insightful conversation and discussion, Martin. Thank you very, very much for that and just letting us know where the fund is right now, but most importantly, where you're headed to in the future. We'll be definitely keeping an eye on the work that the pension fund is doing. Thank you very much for joining us on Business Today.
Thank you. Thank you for inviting me.